Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, make your own financial conclusions, and make your own financial decisions. Today is February 1st, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are going to look back at some of our 1% trades that have wrapped up, closed out, mostly all losers, but they are lessons to be learned, and we will share them with you in this week's episode. Also have a couple of new trades to open, and we'll talk about those under the 1% play. You can also find each and every one of my trades at thetagang.com/sprocket888. I post them all there, the good, the bad, and the ugly. You can also find a link in the description below. Hop in our Discord, say hello. In fact, some of the trade ideas that you'll hear about tonight were actually discussed in there before becoming live trades. Lastly, this is also available wherever you get your podcast. Like and subscribe it so you can listen to this audio version. And if you can't find it, let us know and we will get it there. But let's hop to this week's content. Viper, this was the week that a lot of us have kind of been waiting for. The media was hyping it all up. You know, this is the big Fed returning. Fed announcement was today on interest rates. You know, the Fed hasn't had anything since December of last year. They went on the holiday break, and you know, everybody is, what's the Fed going to do? What's the Fed going to do? Is they going to soften? Are they going to hike? And just all this talk, and there's just a lot of volatility and pent up things. Jerome Powell came out today. I actually didn't watch the recap speech. I was kind of busy this afternoon, and I got a few of the nuggets from the Discord, and they said, yeah, he was pretty firm, but not as much of a hawk as we thought. When we raised interest rates 0.25%, that is quite the fading of interest rate hikes after the very aggressive, I think this was 6 in a row, something like that. 0.75 was most of them. We had a 0.5 in there as well. So signs of inflation easing, you know, not really going to get into all that binary event and oogala boogala, I guess, that they kind of talk about. It's definitely something to keep an eye on because it defines macroeconomic things, but the market really liked what they saw today. We'll see if it sticks and if we continue higher, but all the indices were really ripping after Jerome Powell's announcement.
Yeah. Yeah, the only thing I'd add is, well, a couple things. One, like you said, so I listened to it and, you know, he was firm, not, you know, super cheery, but also not super dreadful or anything. And at one point he even made the comment, you know, sort of defending the 25 basis points instead of anything like 50 or anything like that. Because at one point he was like, you know, once upon a time, 25 was considered aggressive. So referencing all of the heavy pressure they applied at the beginning. He also made some comments around we don't want, he basically just reiterated the whole situation about needing to carefully thread this needle. And he hinted at, just very, very loosely hinted at some of the ideas around a soft landing. Obviously never said those words, but was just referring to, we're going to keep doing this, but we're going to keep doing it carefully, and we're going to not pull back too soon, and all that kind of stuff. But for me, it was very much on brand of expectation. Maybe it was, maybe it's, you know, broken clock kind of thing on my part, having, you know, not really been through these entire cycles yet. As we talk about many times on the show, we're just learning along, doing this as it happens in real time. But one thing that I've come to learn and understand a little bit better are these events, these news events, and the way the purpose of the market is to predict and anticipate the future. And that's been my biggest learning over the past year, was seeing the markets crash before we ever got our first rate hike. And that being the signal of like, the market expects this is coming, so the market sells off in response. And so then people think, well, we got our first 75 basis point hike, but then it kept dumping, and it kept dumping because of that rate. No, it kept dumping because people thought that's not enough. They're going to keep going, et cetera, et cetera. So the fact that this year started out so strong the way it did, there were, I think we talked about it on a previous episode, there were, tax implications and things like that, could have led to why this year started out strong. But because it's continued strong, it enters in this idea that the market is just anticipating the future. And going into this rate hike today, 99.4% of the market surveyed anticipated 25 basis points. So that's kind of where I'm trying to keep my framing at, is what the market's doing today is anticipating what the next rate hike is going to be. So yeah, we'll see. We'll see, though. I mean, like I said, learning process.
Yeah, and as we're writing down this stuff in the proverbial record books here with these recordings going up, and maybe someday we'll go back and listen to them. You're absolutely right when it comes to kind of that understanding of what's going on with news events and market reaction. And I was reading an article the other day, actually it was a couple weeks ago, where it basically was kind of saying, hey, look, don't get super excited if the market starts rallying here, because a lot of times the market is anticipating something beyond what the immediate future holds. What they were kind of alluding to is they were basically saying, we're going to go through economic downturn upcoming, and the market is going to be kind of going up in the face of that, because the market is going to be kind of telegraphing the other side of that economic decline, and basically saying that, that's the economy is a lagging thing that comes from perception and all the macroeconomics that cause the market to kind of go down. And if you kind of look back, they basically said, look, when the Fed starts slowing, that's the start of the macroeconomic slowdown of things of sorts, right? The Fed doesn't stop once the economy has contracted. The Fed typically tries to stop before that has happened. And then a lot of times, one of the things that turns around some of that economic growth or pulls out of that correction is when the Fed starts to cut the rates. And so I think this is kind of an interesting dynamic that we're having going on right now, is because some of this rally, I believe, based on what I've read and things like that, is the market anticipating that the Fed is done. And to some degree, it's starting to anticipate a potential economic cut within the next year. Now, whether or not that happens, who knows? But it is kind of an interesting thing to see how much of a lagging or leading indicator, because a lot of what the Fed uses to make their judgments are all relatively slow indicators and lagging indicators by design. And so it's unreasonable potentially to expect the Fed to be able to make judgments on future activity and future forecasting, right? Because a lot of their indicators and numbers are inherently lagging. So enough of that talk. Let's hop to our 1% trades. And we want to bring up here a summary, just hitting on a couple of these because we skipped over this last week, even though two of these positions technically closed last week's recording. We got three closures here to kind of call out. Unfortunately, they're all three losers. We got my trade that I had picked out on oil that closed out on the end of January, just the other day. That was a $48 loser. That was a 100% loss. That was purchasing options, and they expired worthless. The other trade was a premium sell. I did an iron condor on coin, which, man, crypto has been on fire. I opened that up at the very end of last year. It expired on January 20th, 23, and expired completely worthless. Expired worthless. So I did not get my money. So I lost 58 or 138%. Then lastly, Viper had a trade on Grab just recently on 118, ended up closing it out, stopped out of that thing on 120, $7.29 loss or 3.7%. Upcoming, we got a couple trades after this we're going to talk about here. Viper opened up a new SDC trade, and we'll kind of talk about that immediately after this. And I covered in last week's episode a Amazon trade that I actually will be taking tomorrow. It's going to open it tomorrow and it's going to close on Friday. And I'm going to try to splice in maybe some of the results before I release this on Monday. We'll see if this makes the cut. But Viper, before we recap the losers, because that's just kind of sad, why don't you talk to us a little bit about SDC?
Yeah. So like you said, and the outset, this trade actually came about just from discussion in the Discord. So it happened right after I took that loser and had been stopped out on that. And there was some discussion about this SDC thing. It was while I was looking for a play. I went, looked up the chart, and liked what I saw, and it fit some of my personal criteria of what I'm trying to do with these positions, which, recapping just very briefly, the 1% challenge, I'm trying to find potential plays that anybody just getting started with a very small amount of money could feel a little more comfortable getting into. And so what I mean by that is, while my position size still kind of fluctuates a little bit, psychologically, I believe that somebody would be more likely to buy a couple shares of a $10 stock instead of one share of a $20 stock or something like that. So, trying to get down into that lower level of cost, so that way you can be more comfortable. I mean, even if you're not even doing, $10. So this SDC, if we take a look at the chart and kind of go through this a little bit, I opened it at 54 cents. So, I mean, this is like primo practice material here. Take 2 shares, take 3 shares, 4 shares, stuff like that. $2, $3, $4. You're getting the exposure of real money. You can't do partial shares on Thinkorswim, on TD Ameritrade. So, I'm trying to, find some of these so that it fit that criteria. Now, what I do want to heavily, heavily caution is if we zoom out here at the history of the chart, we got our cutesy little dinosaur here of the beginning of time. This is not an encouraging chart. I believe this is Smile Direct Club. This is some sort of something. I don't know if it's actually pharmaceutical, but certainly medicinal of some sort. So that's also the trade-off down here in this, almost penny stock range, or maybe this actually qualifies as penny stock.
This is definitely penny stock.
This is also dangerous territory. So it's if I pick something that fits that danger category, I definitely want to call that out, because you shouldn't just go look at any 30-cent stock and be like, yeah, this is good, I'll do this. Like, there's also some trade-offs here. So this is on the lower end. I like to keep it $5 to $10, but here we are. The chart, what I liked about it on the chart was this green bar move here, where we lost a level, we came back, we gained it quite significantly, we pulled back, and then we got some good tests off of it. Now, the P&L chart, the P&L box here is where I always start that where I actually open the trade. So when I opened it, we didn't have this second test yet. So we had one test bounce. We came up. We made. I'm on the 4-hour chart here. We made a lower low, and then on the next day, I was like, all right, good enough. Let me take a position on this, and I did. And so you can see where the trade is at now. We did come back. It's a little hard to see, so let me drop a line real quick. My stop loss is down here, which was pushing a little further than I wanted to go, but because of the nature of this stock, that it obviously wicks quite heavily, I didn't want to get caught up in that. And on a technical level, you want to give it some room back to this previous high back here. So I did that. So you can see we pulled back a little bit, and now we're up and running. And currently my profit target is up here at 76 cents. Looking at this a little bit more in the eyes of the 4-hour chart, I think I might have made that decision based on the 1 hour. Yeah. So I had this candle close up here close to 76 cents. Looking at the 4-hour, I might actually pull this in to maybe 70 cents, 68 cents, somewhere in here. I don't want to mess around with this wick price action up here. Closing candle, we're on an upswing here, so we're going to go test the high. So 68 cents, somewhere around there might be a good update to getting off the ride and still, having a decent return on it here. And the other thing I'm going to call out is now that the play has been on long enough for more price action to develop, and we'll see this a little more clearly if I drive in to, let's say, the 45-minute. Just temporarily get rid of this box so it's a little easier to see. We had this low. We came back. We made a higher high before we came back and tested this low again. You don't love to see the same level hit, but after a higher high, it's not the worst thing in the world. So that was a swing. And then we had this other swing here where we put in a higher low before we now made this new local high. So what I am very, very likely to do tomorrow on the market open is, I guess technically this is just a limit order. I could do it whenever I want. I think I'm going to pull my stop into profit here. I don't want to mess around just waiting for you don't want to lose what you've already gained. We've gained this higher low here, and then we've put in a higher high, so a local high. So because of the nature of what this beast is, this is a bit aggressive to bring it all the way up here. But this thing could gap down in a flash. So I'd rather get stopped out, assuming that the move happens during trading hours and not overnight. So I think I'm going to bring my stop up a little bit here. Then we're all set. As long as it doesn't gap after hours, which is a big if, I should be set up to at least close and get stopped out in a profit, which would be a great turn of events per that chart we just looked at.
Yeah, we don't have too many winners in there, Viper.
Might cook the books.
Question for you here on looking at this stock being in the bargain basement. This is not a shopping bin I ever partake in. Do you do any looking at this with short interest or float or volume? Was there any criteria you looked at here with respect to those?
No. So far I haven't, because similarly, like I don't generally shop down here. So I did not look into any of that. So that would be interesting to contextualize if there is any of that going on. Because that can certainly cause all sorts of havoc down here in either direction, I guess.
Yeah, I'm not saying this is one of those cases. I'm just kind of putting this out there as a caution for some viewers that start looking at these, 30 cent, 50 cent. One of the things that's super important to look at this stuff is how much of what's known as float or available shares there are to trade. Because when you're at this low of a share price, depending on how many open shares are out there and stuff like that, you can get people in there that basically do what's called a pump and dump, where they can basically buy large swaths of these things, and that's enough volume that doesn't cost them that much money that they can start moving the needle on the price action, and that stuff can kind of draw in other people to then start picking up shares, and because they've already sucked up a lot of that float, that causes price to kind of drive up, and then that big whale that had come in can kind of unload those shares at that elevated price. Not saying that is super common, but it's a whole lot more common at this price point per share than above $5, $10, $20.
Yeah.
Stocks.
Yeah, for sure. And I guess this is not scientific whatsoever, because looking into the raw metrics like you just called out is definitely far more official. But just as an example, one thing when we get down into this level of stock here, what I don't like to see is, 5 minute is for stock is pretty low level, but this is where we start to see some of what I don't like to see, which is which is this constellation map, of just these orders that just jump around because, volume's so low. However, if I'm looking at like 45-minute and we see more of a candle body and a less of that glitchy constellation map, at 45-minute and above, I start to feel a little bit better. By comparison, this was another stock that was discussed in the Discord. We're on the 1 hour chart here on whatever this thing is, and it's still glitchy, blipping all over the place. So this is one like I would not touch. And like I said, this is not a scientific measure. Absolutely go to those actual numbers that you called out, but just on a visual basis, if I look something up like this, I'm done. I'm not even interested.
Anyway, so the other trade we got going, I do like the pull it up the profit. I like that move just because we haven't had that amazing of a record so far, looking at the chart here. But anytime you can lock in a guaranteed win, and you've already kind of tested and kind of pulled above, so it's not, yes, technically a price action says it could go down there, but you're talking a lot of sensitive movements in this type of thing. So why not put yourself in a win-win situation from a win or lose situation? The other one I want to call out here is tomorrow. Go back and watch last week's episode about earnings and iron condors, because I will be putting on a trade on Amazon for their earnings announcement after the bell tomorrow. I'm going to put what's known as a 16 Delta iron condor. Like I said, last week's episode talked about it. Really wanted to trade team, but that position sizing was a little bit too big for the 1% challenge. So I actually probably will be playing team in my portfolio, but the Amazon will be the one that goes on record for the 1% trade. As planned, went ahead and put on that Amazon trade on Thursday, February 2nd. I'm going to put a link right up above. If you can go back and watch the whole setup on the earnings iron condor, went ahead and put this trade on probably about 60 minutes, 30 minutes into the close. The 16 Delta ended up being short the 102 put and short the 127 call. And then I bought protection $1 out from each of those. Was able to sell that iron condor for 31 cents. And, going into earnings, which is that huge unexpected binary move, the volatility of the options that were expiring this week on February 3rd, basically 1 day later, that's what I was trading, because that has the most of that premium from the volatility inflation. Those were going for over 250% volatility, spot volatility in that options expiration. The options that expired 1 week after earnings, the next Friday, the volatility falls off to about 60%. And then everything else below there was maybe 45, 48% just prior to earnings. And what that volatility lets you do is it really lets you stretch out those strikes. I went out 16 Delta, which is roughly a 1% or a 1 standard deviation expected move. Amazon came out after the bell. They posted mixed earnings. The stock kind of went up, went down, but it stayed basically within those two strikes. I went ahead and put a order to close into the market at that time as a limit order, expecting that volatility contraction. And sure enough, probably around 11 a.m. on Friday, that volatility contraction had come in enough, and I was able to buy back those options for a penny. So I sold them for 31 cents. I closed them out for a penny. I basically was able to capitalize on $30 return. That was a $100 risk, so 30% upside. Max upside would have been 31% if I'd have gone all the way to expiration, staying between those strikes. I never recommend that, especially when you're dealing with options. Weird things can happen after the bell closes and before the options are basically exercised and sorted out. So it's just best to take that risk off the table, get out of the option, close it out. And the volatility contraction was just massive, massive, massive in the play. So I updated the table here, and you can see that 1% 16 Delta Iron Condor returning 30% profit, making $30 in P&L. It was a 1 day trade on before earnings event happened, binary event happened, volatility contracted, closed out those options the following day. So, talking about the losers, I wanted to switch over to two losers that I had racked up to cover about what I learned from my losses. So, the first one I want to look at right now is Coin. So, Coin was a iron condor that I sold, and the idea was we were going to stay inside a range called out here on this chart, and the thinking was we were kind of dancing along the bottom of this channel. The channel was a bit wider here, like that. And I thought, oh, look, we've really been kind of dancing down here in the bottom of this channel. So let's put this nice spread in here. It was an iron condor. Basically, that means we got to go, hey, diddle diddle, right down the middle. And the way that I plotted that up the first couple days, everything looked pretty cool. Then we started breaking out of it. And because my thesis was playing in this channel, it really didn't break that thesis until pretty much right at the expiration. Not much management. I really don't take away much lessons from this one. I don't think there's anything I would have done differently as part of this. This played out inside the channel. This was the thesis. There was always the probability or possibility that this thing could have come back down at any moment inside that channel. There's really no feedback there when I look at this from my perspective. So the other play that I had was a play on oil futures. So let me go ahead and pull this one up. Now, this one did have lessons learned. In fact, I specifically called out when I should have exited this in a previous episode, and I would have exited for green if I had listened to it. So this, again, I've been really experimenting with these channel plays. So, like it or not, I think the channel is a different representation of the same price action. It's a little bit, I think it's easier to kind of draw, but you can fool yourself and you can draw channels that fit your thesis and give you some bias. So I will caution some of that, but the theory here is we're trading in this channel. I expected this channel to continue. One thing that I have noticed with most of the channel trades that I've put on is when you break out of your channel, there is often a retest that comes back down to the top of that channel and then kind of bounces off of it. And ironically, that's actually what happened here. So I opened the trade because I thought we were at the top of the channel, and I put on a trade that was bearish. So basically saying you're coming back to the bottom of the channel. And it didn't. It broke out, and then it rallied. And then we had this huge drop off where we came back down to the top of the channel. And we actually recorded an episode, and we called this out in the status because this thing was 30% in the profit at that moment. And I said, this has broken my thesis because we have left the channel. When we pull back down, we could exit for a profit. And we made note of it specifically because we were in this red box, which wouldn't be profit at expiration. But because volatility had expanded, because that's how options work, I could have gotten rid of that thing for a profit at that moment. But I said, no, I'm going to hold on. Let's play this out. We're going to learn about these channels. We're going to learn about this thesis. And sure enough, it hit that channel, it bounced off, and it's forming a new channel here. And that's kind of one of the things that Viper and I had mentioned before. My thesis is whenever you break out of a channel, you're in no man's land until a new channel has formed. And that's effectively what was happening here. We broke out. We didn't know, are we going to go up? Are we going to go down? Are we going to go sideways? What's going to happen? We came back down, we retested, and now we are starting to form the new channel. So the lesson that I learned here, or the takeaway here, was thesis blown. Get out when you can for minimizing your loss, or even for a profit. In this particular case with options was possible here. So this one definitely is a lesson learned for me to go back on. And I kind of knew it, I guess, going in, and I just kept it. So shame on me.
Yeah. And I mean, we've talked about this before, that it's a little harder to stop loss your thesis on these option plays, even harder when you're dealing with that channel there, because, technically, like a stop loss on just straight shares, you would have, you would just put your stop loss order in at a price, and when you breach that price, you close it. But as you saw on that channel chart, that price would have triggered, just to clear. Actually, I don't even know. Oh yeah, you can limit. Can you limit options? Limit order options?
You can. I don't recommend it per se, but yeah, you can.
So, but still, we busted out of the channel. We came back to that price, but we hit that price before we busted out. And so it just creates this whole thing and the whole volatility thing. I mean, that's another big reason why you probably don't want to use limit orders on options, because there's so many moving pieces and parts into what makes that thing have value in it. So it's a little harder to hold yourself, I guess, is my point, to hold yourself to a thesis invalidation, because you don't have a firm mechanic, a firm lever to force you to.
Yep, that's true. And that kind of goes into when you enter the trade. Like options, you typically have your max profit, your max loss when you're defining them, and so you got to be good with your max loss, your max profit. It's really like your stop orders that you're doing on straight share trades. So it's a different mechanic, I guess. And as we just keep iterating through these, you'll figure out what's more comfortable to you, and that's what you'll gravitate to, and you'll develop your own flavor of trading. And that's really what I've done over the years, what Viper's done as well. And that's how we all end up trading, is we take it's the buffet. We like a little bit of this, we like a little bit of this, and that's just nasty. I don't want to touch that. And everybody has their own flavor.
Oh, well, speaking of those pesky stop orders and forcing you to stick to a thesis, let's take a quick look at my loser grab. So this is interesting because I don't know. I'm going to keep an eye on it. I may still get back into this, but I want to make sure I'm not emotionally chasing it, which is why I have not entered yet. So anyways, the main thing I wanted to play here, at very back when I first saw this chart, was I loved this gap here. There's a lot of price action below when we lost this level. There's been a lot of price action to attempt to gain this level again, and we're currently coming off of the third try. So that's what brought me into this trade. Was we found a decent bottom here. We got some support off of it, and we ever so slightly broke a new high here. So I was interested to throw some chips on the table for this price gap here. Now, that's not to say that you should ever expect it to just close the gap up. There's absolutely price discovery, but there's very little resistance because there's just no anchor points for a large batch of orders to hang on here. So if we zoom in now to where I made my trade, and we'll see here, same deal. I put a box in there of a profit loss box, and I actually, before we even got to the gap, I was planning to close out 50% of the position because there was just enough space here. It's that whole mentality of, if you can take some profits, take them, especially when you're going up into an unknown land like the giant gap that's up here. So I wanted to take 50% profit here, and then let's let the runner run and see where it wants to go. If we got clear of there, I might pull the stop loss up to the bottom of the gap, just to, make sure I catch a stop out up there. Otherwise, it's a runner. I already locked in 50% profit. It's a runner. Just let it go. See what happens in no man's land there. However, we can see that we had this pesky little dip here that this was my stop line there, and we got just enough to pull me out of it. And here we are. I stayed out, got stopped out there. It happens. Like I said, that doesn't mean the trade is dead. If I clear all these lines out of the way, here's a read on it that I really like to potentially get back in. So we put in a new local low is what happened here when I got stopped out. So what I really like to see when we do a local low like that is whatever level we lost, I want to see us get it back. Like I said before, never lose what you've gained. and gain what you've lost. And so what we can see here is this is approximately the range of what we lost when we put in that local low. And you can see we came back up, we tested the bottom of it, we came back up, we tested the top of it, and now we're kind of finally climbing out to where I think I had hoped we would have been the first time, because I opened it here on the left side of this box, so none of this had ever happened. I just naively thought, well, not naively, I mean, there was some basis to it. It was a higher low here. We pulled back, we were coming back up, so I was like, all right, we did our move, and now we're just going to start climbing back up. Well, nothing's ever quite that easy. Nothing's ever that predictable. We had a little bit more chop and noise, and now we're kind of back up into the uptrend here. So we'll see. Maybe this will be a future second time trade here, but I do like I said, I like what I'm seeing here as far as lost this range, gained it, and now we're in an uptrend putting in some lower highs. So we'll see, but until then, this is a loser because I got stopped out, and that's okay. Like I said, don't chase it if you're at risk of becoming emotional about it. That's when you really lose the money.
Yeah. So what you're kind of saying here is you're basically saying you would do it again. Is that what I'm picking up here?
Yeah. Yep. I mean, certainly, the foundation to taking the trade was solid, and now a new foundation for a somewhat completely different trade is taking shape, in the fact that we put in a low and then we gain that range, and now we're gaining higher highs and higher lows. So it's not the same trade as originally, which I think was important to put that space between my mindset of the first play and where it's at now. It looks nice again, but it looks nice again for a completely different reason than what I did the first time.
And I think it's an important call out when you look back at a trade that it's okay to have a losing trade where you say, yeah, I'd do that again, because it is absolutely nonsensical to think that you're ever going to hit bat 1,000, right? You're never going to hit every trade. And that's why Viper enters a lot of these with a 3-to-1 or 4-to-1 risk reward ratio. So he's bailing at the loss of 1 in the hopes of gaining 3 or gaining 4, because he knows that over time, as long as he keeps those losses minimal and then gets those occasional bigger winners, that in the long run, that pays out as an overall profitable trade. And so it's very important not to look back at your trades, in my opinion, and say, how could I have made this a winner? It's, how could I have done this differently if I needed to? And it's okay if the answer is, nope, this is how I would keep it.
Yeah. And actually, looking at this a little bit more, we had some convenience of hindsight in what I just described as the new position, the new potential play. And I think I just want to spend a little bit of time on this because I think it's important. If we rewind the chart here to, let's say, right here, because this was a point in time after I got stopped out, and when I would have been looking at the chart of like, okay, should I get back in? Absolutely not. Like, nothing about this chart right here says it's time to go long again. If anything, this chart is saying perhaps consider going short, though it's not a strong argument for going short. So what's happening here is the thesis of that original trade, like I said, is broken because this was the low over here that we don't want to lose, and we put in a lower low lower than that. So that's number one. That was obviously my stop because I said this is the point where my thesis is broken. Stop me out. I'm done. Because now if we put in a new local low, we're at risk of a reversal from this uptrend. Second confirmation is we come off of that lower low and we actually put in a lower high than what we had over here. So now this is full on. You should not be expecting probability of up. You know, we talk about this all the time of probability of the trade. And right now at this point in time, there was nothing to suggest probability is in your favor for this trade. So, you know, that in mind, if we fast forward then, you know, the new trade didn't reveal itself until we actually broke that. So probability was down. Then we broke the probability and started climbing up. And once we got this higher high, local high from this one that was an invalidation high, that was the point to watch. And so now we're actually, like I drew before, that range, we're coming back to test the top of that range. And that's kind of why it's a completely new play setup, because we had full on invalidation of my original play in this price action right here.
So that brings us to the end of this week's episode. A lot of trades to go back there and do some retrospection on. Like I said, go back in our catalog, watch the logic of how we opened them. We're going through the logic of what went through our minds when it closed. We're kind of feeding back there to you. Just trying to be open and transparent. You know, maybe you can learn something going through that. Something jumps out to you. Something strikes you that way. We're going to keep them coming. You know, Viper's got one that he's lining up there that he entered. I've got my earnings one tomorrow, which will be a totally new mechanic because we haven't really done an earnings 1% trade. And we're just going to kind of keep trying different flavors out there to test our thesis and bring that stuff to you. Hope you guys are all kind of enjoying a little bit of this market rally and you're finding little corners of the market to trade in to make a little bit. Lots more action coming. So good luck out there. And remember, think outside the block.